Morning traders, Paul here with GammaEdge. Today is Monday, January 23rd. Let's get started. Pause your players here, read to the bottom. If you agree, hit that play button. Summary for today, market models have flipped again, back to that long-term model. That is the nature of a short-term timer. We did have a reversal on Friday. The cumulative tick signal is now long. We're on day one of that. This is an entry day. Long term, we're on day 4. This is the longer term measured on the daily and the weekly time frames. Very solid. We pulled back as we thought we would on the Tuesday, Wednesday morning time frame, and we wanted to hold above the ribbon, and we did. And that is a good thing. It was one of the outcomes that we were planning for. Market breadth, as viewed by our 52-week new high, new low indicator, continues to show a bullish broad support. We just completed 13 days. This is from the first day of trading this year, so we're in good shape there. On the goalposts, plus GEX remains at 4,000. Minus GEX is at 38. It has dropped from 3,900. We take this as mildly bullish, as puts are being closed at 39. A lot of those were 0 DTEs, 1 DTEs. And 3,800s have been opened. We also had a move up in spot price, and that, of course, will also reduce some of the gamma. Transition areas that we're looking at, we think the 39.20 to 39.65 area is pretty key here. There are some hiding places within there, so we're mindful of potential overnight hiding areas to reduce exposure. But this is where the range that bounds the zero, so we want to keep track of that and keep those levels in mind. To the downside, 38.80 is the likely floor in the short term, and to the upside, the 40.45, 40.50 area looks to be the short-term upside bound. We have a JPM, actually end of March, short call strike at 40.65. That is pretty powerful right now. We need a lot more calls to go in to start neutralizing that, and we haven't seen it yet. Taking a look at the market model, like I said, we had this transition in the ribbon, the long on 117, and that's kept us here. We were talking on the Wednesday morning call that if we did pull back, we wanted to stay above this. We started off very, very strong. This is called a linear up signal, and then you can see we failed with some of the Fed speakers opening their mouths. We pulled back for 2 days, and now here we are. We're recovering. So the CT is long. It is higher than the previous close. This is a new trigger, and it's above the overall longer-term ribbon. This is good. So if the trend continues, we're looking for a railroad track pattern where all of these short-term moving averages start spreading apart, and they'll look something like this if the trend continues. If not, we pull back, and this will collapse, and you should avoid taking signals. Based on that, we're watching 2 strategies that we have extensively back-tested here at GammaEdge. The first one is a 0 GEX to trans, and we're looking at these symbols, our MD50, MD95, so these are maximum drawdown levels over about a 10-year time frame. No stops. You're looking at intra-trade heat of this amount, days to target, 9 or less. And then we have this plus trans to plus GEX screen. These stocks are appearing from the fish pond. Again, a little worse performance, but you're in the trade a little bit longer. That's why you see these numbers. Use this to size your positions, and we are looking for possible entry on these today on any strength. Key levels that we're watching today, as I said, left goalpost has dropped to 3,800. That right goalpost remains up at plus GEX at 4,000. Starting to see really a good dominated structure here in the combo complex, unchanged on the PM complex, 2% open, high, low, close. So you're probably safe to sell premium above this level or below that level. PM-Settled Complex, you can see that dominant green here. That is dominant delta structure. That's very good. This is a change from Friday. Here's that transition range. You can see there's a little bit of noise in here. If we do fall back into this area, look to get trapped in any of these areas. I don't think we're going to drop below the 38.80 into any of the closes. We might try to test some of this. The 3,900 line across all of the different views is pretty strong and pretty dominant. You can see here 4,000 is a key number. In general, it's got the most calls. This is the call open interest bubble. This is the plus GEX level. And we could potentially pin under this. Also note that 40.50 that's sitting up here too. Here's that JPM strike sitting up here at 40.65. The 0 DTE, again, call dominated structure, a little loose below it, a little loose above these two levels that I've indicated here. We are mindful that this 4,005 level, we've seen parking in this area in the past. I want to pay attention to that. Could easily park underneath this level again for the expiry today. Dominant expiry level here at 4,000. To the downside, here's at 38.80. Again, this is why we don't think, we may test it during the day, but we don't think we're going to close below it. 39.40 for today's action is where things start getting a little interesting. And as we push down to 3,900, want to pay attention to that. 1 DTE, which is our look ahead in tomorrow. First of all, I just want to note up here, it's very weak. Tuesday, Thursdays are just generally weak. It's hard to infer anything of any substance out of a Tuesday, Thursday in the SPX, even though it is a huge complex. Again, note the transition. We are looking at these potential areas for parking spots. Here's that 3,900 line. We don't think between today and tomorrow we're going to get much above this 4,000, 4,005 strike. Just pay attention to that. Again, fairly loose structure, but it is turning. We're getting a lot more delta domination up here. And then down here to the low side, just a little bit of a drop, a little bit of an improvement. So we're seeing some of the out-of-the-money puts being closed, and these in-the-money calls are really starting to dominate here. Below that 38.60, 38.55 level, still a loose structure for tomorrow. Not looking, again, for anything to go down there. Excuse me. Taking a look here at the crystal ball for the week. The crystal ball basically says these are the ranges that were in play. Here's that 38.80 again. It keeps popping up here. Very strong level for the overall week. This 40.45 is a very strong level to the upside. Here's that 40.50. We're going to have a call-dominated structure above this 49.50, 49.55 zone. That's good. We're in it, and so we are expecting a little bit of dampening of volatility. Overall for the week. To the downside, when we look at this, when we look at the 3,900, we think these are the areas that could get tested to the downside. We don't think we're going to close below this. To the upside, same thing. We think we've got a lot of work to do. Here's that 4,000. You can see this is a dominant expiry for the week. Call open interest for the week here is 22,000 contracts right now coming off 4,000. Until we clear the 4,000 strike, we're going to keep bumping up against this, and the gamma at this level is going to play a role here. Taking a look at the combo complex. Fairly wide. I don't like this per se. Fairly wide transition, very noisy back and forth. We could easily fall back into here and hide. So 39.15, 39.20 area, all the way up to this 39.60, 39.65 area. Just be aware that if we move back in here, it's not bearish. It's just a nice hiding place, and you can see the gamma exposures kind of back and forth. So a lot of zeros in here. That being said, we have a lot of delta, call-dominated delta here. And above the spot price, the in-the-money puts are losing ground. We're really seeing a nice movement here. About the same we saw last week, so just pay attention to that. But we're seeing a nice movement in the calls going in and the puts being closed. And so that's really fear on the complex, on the ITM put side, and speculation on the call side. So this is constructive for the bulls, and we think as long as this holds, the path north is towards that 4,000 strike, and then eventually that 40.50 strike. And finally here, taking a look at the overall combo structure, here's that 4,000 line. 4,100 is very close. You can see that in terms of magnitude, if we get any pressure to move up and people start stacking here at 4,000 or 4,100, we could easily set that as the upside target. Here's that JPM 40.65. This is the end of March short calls, and definitely has a role to play right now, or it's kind of sticking out like a sore thumb. You can see here's where we are right here at 39.72. The top of the transition is right around that 39.65, and the bottom's at 39.20. So this has got to clean up a little bit. This is a fairly ugly structure. It's not going to stop us from moving down. The first line here at 3,900 is pretty powerful. We don't think we're going to get below that 39. If we do break down, like I said, that 38.80 area, just due to the delta structure, it looks to be a pretty good support level. And all the way on down 3,800 is the minus GEX level, and certainly we're not looking at that right now. So that's it for today. If you have any questions or comments, I want everyone to come into GammaEdge.us, 14-day free trial, all the tools turned on. Come in, kick the tires, meet the team, meet all the traders. Really, really good group of folks. Follow us on GammaEdges with S on Twitter. And then here on YouTube, of course, if you like today's content, let me know immediately by smashing that like button. That gives me immediate feedback that I'm providing the content that you want to see. And then, of course, follow us because Taylor and I attempt to post at least 2 videos a day. So with that, I bid you farewell. Make it a great week. Hope to see you in the Discord. Thanks, everyone.